Meta.
I guess so.
Can you explain this? Meta.
I'll do my best. I mean, the numbers weren't bad from a revenue standpoint. They beat Q3 revenue. The guidance for Q4 was right in line with what what people were expecting for the holiday quarter, which is always the most important. I think the key here is that they said that their spending in 2026 is going to be way more. They were already spending, between 70 and 72 billion this year in capital expenditures. The spending, I think, was up, more than 30%. Now, next year, they said it's going to be meaningfully larger. So if you were sitting here, trying to get comfortable with this idea that Meta is throwing tens of billions per year, hundreds of billions over the next decade on AI, you probably were hoping that the Q4 numbers were going to be a home run, right? Not just an inline sort of, we'll do what we said we were going to do. You want that to be a lot larger if you're going to hear that the spending is going to ramp up as dramatically as it will in 2026.
So Kurt, you think the increased projection for expenses is what's moving the stock lower rather than this one-time tax charge, which, yes, we're going to ask you about?
That'd be my take, because the one-time tax charge
is one time,
and it's for a quarter that's now over and done with. And Meta, if you take them at their word, says that this big beautiful bill, which is what they attributed this one-time tax charge to, is actually going to be the bill is going to help them tax-wise long-term. So I think if you believe that to be the case, there was a one-time accounting thing in Q3. And to me, the bigger flag is that they are, again, going to meaningfully increase spend here.
That's really helpful. Look, you wrote the book on Twitter before it was called X. You cover social media platforms. You are not a tax attorney, but I'm still going to ask you this question.
Sure.
Why is Meta Platforms the only one that's reporting this one-time expense, at least thus far?
Should I go back to my phone, pretend to be emailing so I don't have to answer
so
this question? I don't know. I don't know. I'm told that this is something that actually other companies are dealing with. I was told IBM and Broadcom, similarly, who have already reported, had similar tax things. I presume maybe other companies will as well. So I don't think they're the only one. Perhaps it's sort of getting a little bit more of attention than others. It's also possible that Meta is choosing, I believe they chose to do this giant one-time tax thing. It's possible others, maybe the implication being that maybe they could spread this out. You're right. I'm not a tax expert, so I'm sort of offering a little bit of guesswork here.
It's helpful, though.
But I don't think they're the only ones, number one. And number two, it's possible other companies are handling it in a slightly different way. That's what I will leave you with. I can't say for certain, don't ask any follow-ups. That's where I'm going to stop.
All right. Maybe they thought it was going to be a distraction from that. They're spending more money. I don't know, but it's really got me scratching my head. Kurt, do not go anywhere. We're going to come back to you in just a moment.
You can send some emails, but we're coming back to you.
You can.
Okay, thanks.
We're going to come back in just a second. Hey, we want to go back to Brooke May, managing partner at the independent wealth management advisory firm Evans May Wealth. So, Brooke, is there an investment play off of what we got from Meta, Microsoft, and Alphabet today for you? You mentioned, I think, that Alphabet was the name you like. Are you selling Meta? Are you selling Microsoft on this?
Microsoft is one I think we're going to have to reassess. When we look at Microsoft, they're not cheap. They're trading at 34 times forward earnings. And when you compare that to their growth rate, it's almost a 3, where, their PE is about 3 times their growth rate. And to us, that's expensive. We do want to continue to see momentum in their cloud business, and we expect that revenue to continue to be double digits. But Azure, for example, is having a hard time keeping up with demand. The stock was only up 4% since the last earnings announcement, and it sounds like they might have wiped all of that out today. And so we need a catalyst, and I don't necessarily see the catalyst in the near term for Microsoft to move meaningfully higher.
And I should point out that shares of Microsoft have come off their lows in the aftermarket, still down, but just down about 1.3%. So not as negative as we saw earlier. Hey, Brooke, thanks so much for breaking all this down with us. Brooke May, managing partner at Evans May Wealth, joining us from Indiana.
I want to bring back in Kurt Wagner. He's Bloomberg News senior technology reporter. He joins us from Denver. And Kurt, I want to talk about the smart glasses, the Ray-Ban Metas, or whatever superintelligence is working on. This is what Mark Zuckerberg called out in the press release before this one-time charge. He said, if we deliver even a fraction of the opportunity ahead, the next few years will be the most exciting period in our history. The preceding sentence was Meta Superintelligence Labs is off to a great start. and we continue to lead the industry in AI glasses. Is this the next computing platform?
I'm going to go ahead and say yes, because it's the only one that I think seems to be being built at the moment that I can think of, like that is in the way that you think of a phone, right, or a tablet or a personal device. And so it makes sense to me that the phone would evolve into something else at some point. I do understand why they think glasses could be that thing. It's something people already wear. It's hands-free, which I think is a huge perk. I think the challenge is going to be, as with everything, one, can you make the technology so small and subtle that wearing these glasses on your face doesn't feel weird or look weird? Because people aren't going to want to do it if they don't feel natural wearing the technology out in public. And then, I think too, Meta's going to have a lot of competition. We've already seen Apple, coming up with their own device, Google coming up with their own device. I'm sure there will be others. So, on the one hand, if everyone is building towards this, it makes me think that it's even more likely that this becomes the thing after the phone. On the other hand, it's going to be harder and harder for Meta to maintain that lead that I do think they have right now. They're kind of the first one, they're the first ones with like a mainstream kind of hit in terms of the Meta Ray-Bans. But, that has a lot of technological sort of steps still to go before it, I think, reaches that level that we were just talking about.
So what's your number one question that you would ask Mark Zuckerberg today, or he and his team?
Well, I would want to know if he's got more investments coming in the AI space. And I don't mean just like investing in chips or investing in data centers, but like we've seen some of these other tech companies become equity shareholders or equity stakeholders in other AI startups. And because Meta can't necessarily acquire a lot right now, you may recall they're dealing with a lot of antitrust stuff in DC. We spent several weeks at their trial earlier this year. It feels like acquiring AI for them is going to be hard, but the idea of a mega investment seems more reasonable. So, as we're talking about AI and spending, I'd be curious to know, is all of this going towards infrastructure, or are you being Meta going to become a major shareholder in one of these other promising AI platforms?